Good evening, everyone. My name is David Elwood. I'm the dean here at the Harvard Kennedy School, and welcome to the John F. Kennedy Jr. Forum for what should be a really quite fascinating Malcolm Weiner lecture. Before we begin, I do want to thank the Institute of Politics for hosting tonight's lecture, and to thank the Mossavar Rahmani Center for Business and Government and the Malcolm Weiner Center for Social Policy for helping sponsor this event. Though the person who really sponsored this event and the person for whom this lecture is named is Malcolm Weiner, and I want to say a few words about him. Now, Malcolm gets an introduction that I give to no other person. He is a true Renaissance man. And he's not only a graduate of Harvard College, though many think that's enough to be a Renaissance man. He's a veteran of the U.S. Navy, but after practicing as an attorney, he founded and chaired several investment management firms in New York more than 25 years ago. But he also went on to become a passionate and knowledgeable supporter, a student and supporter of Eastern Mediterranean prehistory. How knowledgeable? He has earned 7 honorary doctorates from universities across the United States and Europe. He's gotten several of the highest honors that various countries can bestow, literally, will there be one other American. And his topics range from emergence to growth and collapse of the first complex societies in Western world, in Crete and Greece, the relationship to civilizations of the Near East and Egypt, the question of whether warfare is a constant endemic to the human past. He's also an expert on chronology and the dating of antiquities. Furthermore, he's published several works on economic policy, and he's had extensive direct experience with international economic markets and academic discussions of them. And furthermore, there was a time in Malcolm's life when he worked on youth training programs, and ultimately that led him to be part of the longtime partnership he's had at the Kennedy School and helped found the Malcolm Weiner Center for Social Policy and the like. It's perhaps no surprise that he was actually born in Qingdao, China, some 5 or 10 years ago. Speaking personally, he's also been a very close personal friend of mine over the years. So Malcolm, welcome, and thank you so much for being a part of this. I should also mention that his remarkable daughter Elizabeth is here, indeed, there's some risk that she's even more talented than Malcolm, but we would never let her know that. She's a student here at Harvard College. Elizabeth, where are you? Somewhere around? I hope she's here somewhere. Oh, she has a class, naturally. She'll be here later. So tonight's lecture is an annual event, and it really does represent Mr. Weiner's interest in both scholarship, international financial matters, and currency relationships and the like. Past lectures have included people like Pete Peterson, Pascal Lamy, Mohammed Yunus, Gordon Brown, Mario Draghi. And we're especially honored to have tonight's speaker here, Henry Paulson. He's a businessman, a China expert, a public servant, a conservationist, and an author. He has served in leadership roles across complex issues in multiple sectors. In a way, he exemplifies the commitment to tackling the world's toughest problems that we at the HKS strive to instill in our students. Known for his candid, often unspoken, incredibly decisive style, Hank Paulson grew up on a farm in Illinois where he milked cows and baled hay. Now, Washington and Wall Street sometimes has a way of trampling on heartland values, but those who know him report that his virtues are deep with profound personal decency and terrific character values. A very prominent member of our faculty reports that there is no prominent American, quote, with a better record of returning phone calls to anyone, large or small. And he originally, after graduating from business school, Harvard Business School, had not planned to go to Washington, but his sweetheart got a job teaching swimming in Quantico, Virginia, so he began working at the Pentagon. And what was he working on? His first bailout of Lockheed Martin. This was during the administration of Richard Nixon. He did such a good job, he was asked to join the Domestic Policy Council in the White House just days before the Watergate break-in. So begins his long and interesting career in Washington. He left Washington and joined Goldman Sachs. Early on, someone at Goldman said, Hank isn't that smart. What he really does is just assimilate and absorb information from others. It says a great deal about our guest tonight that he regarded that as a huge compliment. He argues that leaders must understand their weaknesses and ensure the team around them makes up for them. Ultimately, he became CEO of Goldman Sachs in 1999. President Bush asked him 3 times to serve as Secretary of Treasury, and he finally accepted in 2006. As Treasury Secretary, he outlined a number of issues he wanted to work on, including dealing with the gap between rich and poor. He also spearheaded U.S.-China relations and initiated and led a U.S.-China strategic economic dialogue. But of course, Hank Paulson will be forever known for his leading role during the financial crisis, which came to a head in 2008. In reflecting on the collapse of Lehman Brothers, Paulson describes talking to CEO Dick Fuld and said, "I told him what was happening. We couldn't find a buyer, and without one, the government was powerless to save Lehman." He was devastated. He obviously loved his firm, and to have it go down while you're at the helm, there just can't be much that's more devastating than that professionally. Well, how about being at the helm when the entire economy collapses, which is what our guest was facing when he was at the Treasury. And not only was there no playbook, there were strongly competing arguments about what to do, and indeed so strongly competing that anything you chose, there was some wise and thoughtful person, seemingly wise and thoughtful person, claiming that that would actually make things worse. Yet everyone agreed doing nothing was the worst strategy of all. So Secretary Paulson did act boldly, along with Ben Bernanke, Tim Geithner, and many others. He became the most visible and reassuring face of the nation's economic rescues. For decades, people will argue about what moves were right and which were wrong, but nearly everyone recognizes that Paulson did his level-headed best to save the nation and the world's economy. He helped put together a rapid, bold, bipartisan response at a time when critics claimed that the nation's political system was dysfunctional. We endured a deep recession and a long recovery, but it could have been so much worse. Paulson spent as much of his life since leaving Treasury working to get the nation to pay attention what might be called 3 creeping crises, and that they are in the title of this discussion tonight: China, climate change, and financial risks, crisis management in the global context. His expertise in financial risk is obvious, but you may not be as aware about his expertise beyond that. Even during his time at Goldman, he visited China 70 times, indeed much of that before anyone thought China was that exciting. Someone who knows him quite well reported that after Henry Kissinger, he is the American with the closest and deepest relationships in China. That is quite a statement. He's the founder and chairman of the Paulson Institute at the University of Chicago, which does specifically focus on issues, pressing economic and environmental issues in the U.S. and China. He's also a birder, a lifelong conservationist. He's been a director of the Nature Conservancy. And he co-chairs the Risky Business Project with former New York Mayor Michael Bloomberg and fellow conservationist Tom Steiner. The nonpartisan initiatives aimed at spurring action to mitigate the effects of climate change before the worst potential occur. He's indeed the perfect person to talk to us tonight. Please join me in welcoming Hank Paulson.
No,
please.
Thank you. That has to be the longest and nicest introduction I've had. I can tell I'm not in Washington. Yeah.
I'm going to offer a somewhat shorter introduction to the, we are also joined by someone equally remarkable who will be giving our interview tonight, and that's Adi Ignatius. He's the editor-in-chief of Harvard Business Review and has been since 2009. Previously, he was the deputy managing editor for Time, where he was responsible for many special editions, including Person of the Year, the Time 100, and before that, he was Time's executive editor responsible for the magazine's business international coverage. He's worked for many years at the Wall Street Journal, been the bureau chief in Beijing and Moscow. He's co-editor of the book Prisoner of the State, the secret journal of Premier Zhao Zhenjiang, and President Obama, The Path to the White House, which was a New York Times bestseller. Indeed, please welcome both our panelists, and I now turn it over to the audience.
Well, we're out of time, but thanks for coming. So we do have a limited amount of time, and there are a few topics that I want to try to cover. And one is the financial crisis and how prepared we are for the possibility. Another one, China, and then your involvement in the field of climate change. I know you've gone over the financial crisis a lot. It's the price of being on the front lines of history. But let's go back. 2007, 2008, you're the Treasury Secretary. The financial system appears to be falling apart. What was the scariest moment? What was the moment where personally, probably not publicly, you just thought, uh-oh?
Well, Adi, I think it was sometime the week after Lehman had gone down, we'd stepped in, the Fed had stepped in with AIG, and the commercial paper market started to freeze. And, we had done a lot of work in the preceding year, thinking through all kinds of scenarios. But one thing we had not considered was money market funds imploding and the impact not just on the on the 30 million individuals that have $3.5 trillion there, but that was the funding for big companies. And I got a call from the CEO of a large AAA consumer products company who said that his treasurer had told them they might not be able to make their $800 million quarterly dividend payment because their funding had dried up. And I had several other calls and heard from a number of the biggest money market funds, and I could just quickly see how this would go through the economy. Because when the very biggest companies couldn't pay, make payments or pay their suppliers, and their treasuries and their treasurer started having them cut back and not making their accounts payable, you could see that quickly as they didn't pay their suppliers, rippling through the economy and leading to failures. It would have moved very quickly from Wall Street to Main Street, and boy, it was just. I could just see we were really on the brink.
Yeah. Well, so what's interesting to me is how did you make the calculations? I mean, obviously there were going to be winners and losers no matter what you decided when. Forgetting about unforeseen consequences. How did you calculate?
Well, the introduction basically explained it, because you're always, when you got a big, messy, ugly problem, there's never a perfect, elegant solution. So we always erred on the side of stability. When we made the calculations, it was, you care about fairness, you care about a lot of things, but the number one thing is stability. And you have to be prepared to move quickly. And if you make a miscalculation, you need to be able to change. And a good example, is sticking with the money market, the one thing that we thought would work would be a guarantee of the money market funds. And so I'd had someone on the Treasury staff say, why not use the exchange stabilization fund to guarantee the money markets? And I looked at the general counsel and said, can you give us a legal opinion? Is that legal? And he said, I think I can. And then I had someone say, well, how do you guarantee $3.5 trillion of money market funds when you've got 40 billion or whatever it is in the exchange stabilization fund? And I said, you have a better idea. I mean, let's hope it works and it'll be a guarantee. And so we announced a guarantee, and then I heard from Sheila Bair, who ran the FDIC, the next day, and she said, Hank, you didn't talk to me. And I said, I wish I had. We didn't have time. And she said, well, guess what? All the money's going to run from the bank insured deposits to the money markets. They got a guarantee. I said, good point. We got the team together, and we clarified that the guarantee was, for everything that was in a money market fund as of September 19th. So that was, now most things were not done that much on the fly, but that was a case of something. And the reason I tell that story is, all kinds of Monday morning quarterbacks say, you should have figured out this, you should have figured out that better regulation will be the answer. But this was a situation where when I had arrived in July of 2006, and President Bush got the economic team together and asked me to talk about entitlements, which was one of the reasons I'd come to Washington. I said I'd rather talk about the financial system because I think we're overdue for a financial crisis. Now, I didn't see anything like the one that came. And he said, what will cause it? I said, I'm not sure. Afterwards, with 20/20 hindsight, it'll be obvious, but I talked about derivatives, a bunch of other things. So then we started getting together this President's Working Group on Financial Markets, where we had all the regulators, everyone, and we looked at everything we could think of with risks. We looked at hedge funds, we looked at all sorts of things. We didn't look at the money market funds, okay? We missed it. And look at that as being the nexus to funding commercial paper, which was at the center of corporate funding.
So other than that, so you pivoted on that. Are there, now looking back many years later, do you have regrets? I mean, are there things that you would have done differently?
I would say this to you, there are a lot of regrets, but in terms of the big things, when we made mistakes, we corrected them. And so we didn't have to look back. We took the heat and we corrected them. I see Barney Frank in the audience, who was a partner through all of this. He was my binky in Congress, because he was the person there that understood the politics and the finance and the economics. A lot of people would understand politics and some would understand markets. It was seldom you could get someone to understand both. But when we went to Congress and asked for, I wanted unlimited powers, you couldn't ask for that, so we asked for unspecified. But we had the bazooka, and I thought I wouldn't have to take it out. But we ended up, when we learned more information, we changed. The same with putting capital in the banks. We did something that I think hadn't been done before in terms of having a voluntary program and recapitalizing 600 banks. But we didn't see, I said we weren't going to have to do that, and I'm glad we changed. The things that are generally considered to be mistakes are ones like Lehman Brothers. I think a good part of the world believes that despite everything that Bernanke and Geithner and I have said, and despite the fact that I think most people that know us think we tell the truth, that there's great skepticism that there was something that was available to us that we should have done that would have saved Lehman. But we learned when Bear Stearns went down that a loan into a disintegrating into a failing investment bank, that doesn't stop a run. You need capital or you need a buyer. And we didn't have the TARP and we didn't have the wind down authorities people now have. So most of the things that I look back on today were communications failings. It's very hard to communicate and to, on the one hand, to try and explain to people what's happening without scaring them or making it worse. And it's very hard. When I left Washington, I saw some poll, I forgot where it was, where the TARP and about 90% of the people were against the TARP, and I saw another poll where 60% were against torture. And so I didn't think that was funny at the time, I'll tell you that. But as you look at it right now, you don't want the American people to think bailouts are a great thing, or we didn't have all the tools we needed. So again, I think there are plenty of things we could have done differently or better, but I think by and large we got the big things right because we were not afraid to change when we got new information.
Yeah. Well, so I guess my question is, are people scared enough now? Or let's put it in the context of Dodd-Frank. We have Dodd-Frank. Is that enough to stave off the next crisis?
Well, let me say, you'll never stave off. As long as you have economies and banks and governments and financial markets, I don't care what the system is, there's always going to be flawed government policies that are at the root of excesses. There'll always be financial crises. The banks will always get the blame, and they'll deserve a lot of it, but it's not the root cause. And so the key question is not whether there'll be financial crises, but whether there will be another huge one, and whether you want to step in and get them before the excesses become too great, and you want to have the tools you need to manage them. And I would say, as a result of Dodd-Frank, I think we have tools that I now that I wish we'd had. The tool to wind down a failing non-bank, without throwing it into bankruptcy. As a result of Dodd-Frank, all of the big, complex financial institutions have at least a common regulator in the Fed. They don't have the arbitrage. As a result of Dodd-Frank, they're better capitalized. As a result of Dodd-Frank, there's an effort made to have more of the derivatives trade, in a central clearinghouse. Now we got some things in my judgment that we didn't need, along with it, and there's certain things problems that still aren't corrected, like Fannie and Freddie. But I think to get to your big issue, in terms of how concerned should we be, my big concern is not the U.S. financial system. I think it's got problems, but I don't think anyone's got a better, more competitive, better regulated, better capitalized, more efficient system. And I'm not even as focused on the too big to fail issue. I'm still more concerned about Fannie Mae and Freddie Mac, that hasn't been corrected. And I'm more concerned with getting our economy on a sustainable, competitive path. Having the tax reform, immigration reform, the sorts of things we need there. Because I think if we got a healthy economy, we'll be even better positioned. And the biggest concerns I have are things outside of the U.S. that could spill over and impact the U.S.
Mm-hmm. All right, so I'm going to segue clumsily to China now, because people want to hear you talk about China. But I want to start with Hong Kong, just because the whole world is watching what's happening. I know you haven't been there in a few years, and I won't ask you to predict what will happen, because that would be folly. But I lived in Hong Kong for 12 years. I lived in Beijing in '89 when the Tiananmen student movement was happening. It's hard not to make parallels. The early days of that movement, where there was a sort of euphoria, and you couldn't imagine anything going wrong until it went very wrong. But you, as David said, you've had access at the highest levels to Xi Jinping and others. How do you imagine that core leadership in Beijing is viewing what's happening in Hong Kong?
To get back, so I haven't been to Hong Kong in several years. I was in Beijing in December and February and April and in July. We have 30 people in the Paulson Institute, which is an NGO which is focused on China. I've known, even when I set up the SED years ago, I stopped in Hangzhou to see Xi Jinping in September of 2007 or 2006 before going on to Beijing to see President Hu and Wen. So I'm following China carefully. So Hong Kong, well, first of all, I just like all of you, just like all of us went through the financial crisis together, all of us are watching also on CNN. So I'm watching CNN, reading the news, and when I look at all the people in the streets in Hong Kong, it looks more like Bangkok. It doesn't look like a major financial center. So it's astounding. It takes your breath away. To put it in perspective, that the Brits had Hong Kong for 150 years before they got around to democratizing it, and when they did, I'm not an expert on the basic law. May know more than I do, but it uses general language like the ultimate aim is universal suffrage. There wasn't a lot of specificity in terms of how and when, and so right now, to look at it, you got to recognize that, first of all, and we may talk about that later, that Xi Jinping, who's the general party secretary of the Communist Party and the president of the country, has got enormous challenges in China in terms of their economic challenges, their social challenges, their environmental challenges. So he's got his hands full. He is an economic reformer, but he is not, his idea of of the right political model is not Western democracy, and he's made that very clear. It's about the party. There are also big economic stresses separate and apart from this in Hong Kong, right? Because you talk about income disparity. If you want to see income disparity, go to Hong Kong, because you've got huge wealth at the top and middle class having a hard time even affording housing, and they have a history of. This is not the first time we've seen people at the streets in Hong Kong. I remember the demonstrations about the anti-sedition laws in 2003. I remember them in 2012. So I just say that this is a huge challenge for him, because the whole world is watching, China is watching, and Taiwan is watching. You know, the one country, two systems. They're going to take a look and see how that works. So but there's a lot of other, you know, and how does it play out? I don't know how it's going to play out. I think these things, we saw one way it play out in the U.S. with Occupy Wall Street, right? These things ultimately dissipate if you wait long enough. People don't stay in the streets forever. But I'm not. But this will be. A lot of us will be watching this very closely.
Should America fear the rise of China economically, politically, militarily?
Well, that is, Adi, the question I'm getting today more frequently than I ever got it before. And when you look at it, this relationship is as complex as I've seen it, because I think there's a growing number of people in China that, despite everything the U.S. has done in terms of welcoming them into the global economic system, the WTO, all the cooperation, believe that we're trying to constrain their rise. And there are people in the U.S. that more and more are saying, are they a threat? Are they going to be an enemy someday? And I look at it and say that this is by far the most important bilateral relationship we have. And when you think about the major challenges we have, whether they're an economic challenge, global issues, environmental challenges, if you're concerned about climate or any of the global, the global ecosystem, but particularly climate, how are we going to solve this if we don't work with China? You can look at national security challenges, whether you're talking about the Korea Peninsula or other places, and if our two countries don't work together, it's going to be very, very hard to solve them. Number one, if you think we've got economic challenges in this country, just think how much more significant it will be if China has problems and vice versa. So the way I look at this is to say that our relationship is a complex one. We are competitors. We're going to be competing and we're going to be cooperating. And I think the important thing is that mix of competition and cooperation, and being able to look at the areas where we've got a strong mutual interest, a shared interest, and turn those into concrete actions, which build trust, and not let the differences preclude our working together where we've got a strong, where we have shared interest. So again, it's a complex relationship. I'm really focused on the economic linkages and the environmental linkages, and I think we need to work really hard to strengthen and thicken those, which I think will make some of the other challenges easier.
Mm-hmm. One more question on China. You've had unusually close access to top Chinese leaders. You've met Xi Jinping many times, and at least a couple of his predecessors in the top job.
Yeah.
So we know his biography, but tell us about, Xi Jinping as a person, to the extent that you have had interaction with him.
Well, first of all, he's very different than any recent Chinese leader. That he's not scripted. He's a very genuine, authentic. When you talk with him, there's a real interchange, and he has. I would say this. He has. I knew he was going to be strong. I think just about anybody who's watched him has been surprised at how quickly he's consolidated power. So we haven't seen anything like this in China. You would have to go back to Deng Xiaoping. He understands, for someone who spent his life in government, he's got a good understanding of business and the role of the private sector. And in the provinces where he has been a leader, Zhangjiang, Fujian, and so on, you see the private sector has played a very big role. So he is someone who I believe wants a good relationship with the U.S. and knows he needs a good relationship with the U.S. because he's got so many challenges in China. It's fortunate for China that he's a strong leader because the challenges are extraordinary. They've got an economic model that I think has run out of gas, and it's very hard. It's a lot easier to say you need to rebalance your economy when it's a $10 trillion economy than to do it. And I think he's very pragmatic. He understands the issues. He's very accountable. He's the other thing, which I think people have read about a lot, so it shouldn't surprise people when I say this, but he not only is stepping up to the economic challenges and dealing with those, he needs to modernize government because China doesn't have the institutions they need to really manage a country of its size and complexity. And so he's doing this through the party. And in all the years I've been in China, I've never heard anyone talk so much about the party and strengthening the party. And I would say the one thing that if you haven't been to China recently, I think the thing that will hit people that have been there and really following it closely is you've read about the anti-corruption campaign, but unless you're there to really understand it, that when he took office, he said, if we don't deal with corruption, the party will die. And so he's attacked this with Wang Qishan, who runs the disciplinary committee. But what they're doing is they are going not just to top political leaders. And first of all, they're getting the tigers as well as the flies. So they're getting some very, very senior political leaders and business leaders. But this is throughout society. Taking people out of CCTV, going into academia, and so there's the corruption is widespread, and this is, I think, the fundamental purpose is their first step at getting at the corruption, but it's also very popular politically, and it's also taking out some of the pillars of the state economy that would be resisting reform. So this has been a huge focus.
So I want to talk about our third topic, and then in a second I'll open to questions, and I guess people can line up at the various microphones. But that's climate change, which is probably the focus of your work now. And I guess the question I have is, a lot of businesses, policymakers, would argue that there's a lot of there's a lot of pain in responding to climate change for a problem that seems abstract or possibly something that they won't feel in their lifetime. So my question, how do you create a sense of urgency when people have that attitude?
Well, that's right, the $64,000 question, because in many ways this is sort of the worst imaginable problem, and I don't want to sound too negative because there's a number of things to be hopeful on, but the reason it is governments do best when there's an immediate crisis or a short term, do poorest when it's long term. So this is long term. And also, we're organized to do, national governments to act rather than do things globally. And this is global. A ton of carbon from China is every bit as harmful as from the U.S. So you've got a long term, and we're into short-termism. That's a flaw of the U.S. today, and with the 24-hour news cycle and the whole way our political system is structured and the American people. So I think ultimately, this is not the part I'm working on, but ultimately, the only way you really get change is if the people demand it. And I think I see a growing awareness with young people, and I think young people really are the hope. But in the meantime, I think that I think it is the challenge of our age, and it's not just a huge environmental challenge. It's a risk to life on this earth as we know it, but it's sort of the biggest economic risk I see. And so, Ani, the two parts that I've sort of bitten off on this to work on are, first of all, China, because China is 30% of global carbon emissions, and when you look at the numbers, they're dwarfing ours, and you look at and this is a challenge, and more than any other emerging nation, developing nation, they're certainly not emerging, they've emerged, but developing nation, they are focused on this, and they need to deal with the environment and the air quality, or the leaders won't stay in power unless they do something there. So we've got a climate change and air quality program there. But then in the U.S., we focused on the economic impact of climate. And that's where, with Mike Bloomberg and Tom Steyer, we did this economic study, which because this is an economic risk that needs to be understood and managed like other economic risks. And there were two, and I try to, you see, brevity isn't one of my virtues, so I will try to get to your questions quickly on this. But with what we did with this risky business study was we drilled down and looked at the economic risk of climate by region and by industry sector. And so by drilling down, you can really, I'm from Illinois, grew up on a farm state. When you look at the average, what will probably happen to the U.S. in terms of agricultural production, if you look at it in average, within the most reasonable case, it doesn't look that severe. But when you look at it regionally, you look at Illinois, Iowa, and Indiana, which will go from being temperate climates to arid, and you'll have crop yields drop 50 to 70%. You get some pretty scary results. And so we have a focus on the economic impact to get business decision makers and investors to really incorporate that risk into their decision making, investment decision making, and so on. So there's that's one part of the puzzle.
Mm-hmm. Well, let me open this up to questions. There are, like I say, there are microphones in several places. There are ground rules, which I'm going to read. Please identify yourself and your affiliation. One brief question, please, no speeches. End your question with a question mark. So, right here.
Hi, Mr. Paulson. Thanks so much for coming. My name is Eric Hollenberg. I'm a sophomore at the college studying economics. I'm just wondering, going back to the financial crisis, how much the idea of moral hazard with the banks weighed on you when you were thinking about government action with the banks, and how much you thought, maybe with the decision with letting Lehman go under, and or kind of holding Bear up long enough to go to be sold, and how much that the idea that these banks might not have sufficient, their incentives might be a little out of whack because of the government-sponsored enterprises and things like that. How much that weighed on your decisions?
Well, it was interesting. It wasn't just me. The thing that I was really very fortunate about during the financial crisis is I had two partners in the executive branch, Ben Bernanke and Tim Geithner. And all of us with different backgrounds, we all came at it recognizing how disastrous it'd be if the system collapsed. And so we had enough collective fear or wisdom or whatever that our number one concern was stability. So moral hazard was important, but it was secondary. You know, that clearly when you took actions with Fannie or Freddie, for instance, there was replacing the CEOs, we did certain things with moral hazard in mind, but the number one concern was to keep us from going over the brink. We wanted to avoid economic Armageddon there. So that was number one, and a distant number two was moral hazard.
Thank you.
Question here?
Yes, good evening, Mr. Paulson. Right here.
I can't see you, but okay, good. Oh,
The
yeah.
guy behind the light.
Yeah.
Yeah,
My
I
name
got
is David Rose. I'm a first-year Master in Public Policy here at the Kennedy School. And my question to you is, in terms of their effectiveness, what is the most damaging misconception that American policymakers hold of China?
Oh, I would step back and say, I think generally it's the thing that concerns me the most is a lack of understanding. Okay, a view that someone that doesn't, a lack of understanding and knowledge about China would be the number one concern. And I think the thing that concerns me the most, not just about China, but just in general, are people that would like to wall off our markets, are concerned about foreign investment, are concerned about foreign trade. And so I think protectionism is something that I'm concerned about. There are plenty of people that, in government that have misconceptions of one kind or another. But China is complex. It's difficult to understand. And I'm not saying that people aren't right about some of their concerns. China does things that I wish they wouldn't do. And they're a sovereign nation. And we're going to have differences with China, and that our militaries don't like or don't trust each other, and there's plenty of things to be worried about, but that's all the more reason, as far as I'm concerned, to look for ways to work with them and to thicken the relationships where we have that mutual interest, recognizing that they respect strength, and we've got to be strong, economically, militarily, diplomatically, and I'll say one other thing, which is not a direct answer to your question, but it's related. I think the most important thing we can do in terms of our relationship with China is keep strengthening the U.S. economy and being strong ourselves. But there's plenty of knee-jerk reactions about China that are wrong, but I think it's really much more than anything else. We need to have the confidence in our own system, in our own economy, not to be afraid to compete, and not be afraid to keep our markets open while we're pressing them to continue to open theirs.
Okay. Question here, the other balcony elevated mic.
Hi, I'm Jenny. I'm a junior at the college. And I had a question about incentives. So I was wondering what your thoughts were. Do you think that China is better poised to address it, to pursue policies that mitigate climate change because they don't have to be accountable to a public who's concerned about, short-term concerns? Or do you think it's the opposite? Do you think that in the long term, the U.S. will be better poised to pursue climate change mitigating policy because they're accountable to a public who has growing concern about climate change and the environment?
Well, we are so much farther ahead than China when you look at what's happening to our emissions. So even though China has taken some extraordinary actions that I might not have expected to invest in new clean technologies, close down dirty plants, et cetera, that all of this has been blown away by breakneck growth. So to me, China has a huge problem, okay, that how do you keep growing and clean up the air, which is, ranks way ahead of climate in terms of the Chinese. They care about climate, and a lot of the things they're going to do to clean up the air, are also going to make a big difference with climate as they work to increase energy efficiency and bring on new clean technologies. So to me, it just is a huge challenge they have. They're focused on it, but we are, even though we don't have the policies in place I'd like to have us have, and I think one of the reasons why we need to put them in place is it's going to give us more leverage with the Chinese. I just think that their problems are just a different level of magnitude than ours.
Hello, I'm Amit Tambre. I'm a first-year Master in Public Administration candidate here. My question is regarding renminbi. Its internationalization is more in the offing now. Last year, around 17% of China's trade was settled in renminbi. Where do you, and they are apprehensive about, their forex reserves holding in US dollars. So where do you think they want to go forward on this front?
Can you say again?
Is the renminbi currency their currency? They want to.
Oh, the renminbi.
Yeah.
The renminbi. Okay.
Yeah.
Renminbi, okay. Yeah, now, in terms of the renminbi, and I get a lot of questions like this, the Chinese, they've done a lot to reform the renminbi, but it is, as long as we get these questions, it's just an indication that it's still not market determined. And they are not going to get where they need to get in terms of having an economy where the market is playing the decisive role until they have a market-determined currency. They're not going to have a global currency until they have a market-determined currency. It just so the argument, and there's political pressures there. Okay, there's political pressures. There's plenty in China that are arguing and lobbying, to slow down the reform process. But the point I make, and I'm convinced that the economic reformers there agree, that they can continue to intervene, and if they do so and continue to purchase U.S. dollars, what they'll be doing, they'll be funding structural deficits in the U.S. and Europe, and they're not going to be unleashing the power of their economy, or they can move ahead with reform. And they are moving. I think they're clearly moving in the direction of reforming, not as fast as some would like.
Thank you.
Okay, my name is Julian Duran. I'm a first year here at the college, and my question is mostly regarding the state of reforms of Fannie Mae and Freddie Mac. So some of the proposals, like the Corker-Warner proposal or the Johnson-Crapo bill, both of them dissolve the two organizations, but there's some concern that could lead to big banks both dominating the creation of mortgages, but also the securitization process of them. How do you respond to these concerns, and do you feel these reforms are nonetheless necessary?
Well, first of all, I believe the reforms are necessary, and I am sort of in shock that 6 years after, or whatever it is, we put them into conservatorship. We still haven't got the reform, and And it doesn't look like these bills are going anywhere. Unfortunately, hopefully I'm wrong. And although they're different variants, and I liked Corker Warner, okay, and then the derivative of that, on the Johnson. So I like those bills. Clearly, I would be more comfortable if we had a system where we thought there would be multiple banks doing this. So that would be a better system. But right now, where I am, and Barney Frank knows I feel this way because I got to know him when in late 2006 when I saw people on one side want to take an extreme position, people on the other side take an extreme position, and I got permission from George Bush to go up and negotiate with Barney and work out a compromise. And so where I really am is I'm not on which variant is better. I'm willing to take half a loaf because I think where we are right now is the government is, when you look at it, and I don't know what the latest percentage is, but the last time I looked, it was well over 80% of mortgages had some kind of government support, which means that the market is not setting the price, which I think you're just setting yourself up for a problem down the road.
Mr. Paulson, thank you for being here. My name is Piti Shok. I'm an MPP candidate here at the Kennedy School, and I'm also a proud alumni of Goldman Sachs. My question to you is that what made you decide to take a pay cut and decided to go back from the private sector to the public sector? And other than the fact that the president called you 3 times. And a lot of us here are interested in pursuing public service in the future. So do you have any advice for us?
That's an interesting question. My first job was in government, and after Watergate hit, and the Watergate break-in took place 6 weeks after I joined the White House staff. It wasn't clear what had really happened until late '72 after the election, and then I stayed around for a number of months, and there wasn't a lot to do in the White House, and I spent a lot of time with the people on George Shultz's staff. So I got to, I had the pleasure of walking over and meeting with him at the Treasury building and working on economic issues. So then, when I was running Goldman Sachs, and I got the first approach, I turned it down, and I had a lot of people around me saying, what could you do, in the last 2.5 years, working with a president who was at 28% in the approval ratings. And I was turning it down, and I was scheduled to meet with, they come back to me the second or third time and asked if I would have a dinner with the president in the residence the night before the president of China was going to be there for a lunch that I was invited to. And I turned that down at the last minute because I thought, gee, I'm not going to meet with the president and tell him no, and there's no way I'm going to come down and work with him. And as I was walking out, it was a beautiful day, and I was looking at the Treasury building, and my wife, Wendy, looked at me, and she could see I looked sort of glum, and she said, I hope you didn't turn it down because of me. And of course, she was lobbying me very hard not to do it. She said, because it was important to you, sweetie, I would have said yes. And I said, oh, no, don't worry about it. Well, when they came back a couple of weeks later, and I think then it was Jim Baker that had called, it occurred to me that maybe one of the reasons I had turned it down was fear of failure. That I went around and I talked to audiences like this, and I'd say, welcome change, change is your friend. But of course, none of us really like change all that much. And we all say we do. And I couldn't think of many people that have gone to Washington in a cabinet and left with a higher reputation than they came with. And so when I realized that it might be fear that was driving that, I immediately, just reversed it and said, I'll do it. And when I told Wendy, she was devastated, just devastated. Couldn't believe I'd done this without, and my mother was even angrier, just really mad. Said, you started off working for Richard Nixon and now working with George Bush. You should be ashamed of yourself. And she was, and she was crying and everything else. But I would tell you, it would have been such a mistake if I hadn't done it. And I can just say, even I was glad I was there for the financial crisis, but even without that, if anyone goes into these jobs, it's extraordinary the things you could do. Without the financial crisis, I had the opportunity to set up the SED with China, the opportunity to set up an environmental department at Treasury. There's just a lot that can be done, and I encourage people, you read so much bad stuff about Washington, but trust me, there's a lot of smart people working very hard. No one's going down there trying to do a bad job. And you don't get me sitting in the peanut gallery criticizing them, because I've had it come in the other direction.
Thank you.
All right, so we have time for maybe, two or three more, one more question, maybe two if they're fast. So here.
Good evening, Mr. Paulson. Thank you so much for speaking here tonight. My name is Victor Kamenker. I'm a sophomore at Harvard College. So in some of the rhetoric that goes back and forth about climate change, officials in the United States say that countries like China and India need to start pulling their weight in terms of being sustainable because of the amount of emissions that they're creating, with the response generally being, well, the United States has been emitting for so much longer that you need to also be, or that the United States also needs to be becoming more sustainable. Do you anticipate this back and forth becoming an issue between the United States and China? And if so, how could it possibly be resolved?
Well, it's already an issue. It's a huge issue because, they will cite, and other developing nations will cite the carbon emissions per capita, okay, and what we've already done. And so it is a significant issue. But if the two biggest countries, biggest economies, largest emitters of carbon, largest users of energy, aren't able to find common ground there's not a lot of hope. And that's why I think it is so important that we get our own house in order and show leadership. And I think that there's going to be, there's growing pressure internally for China to do some of the things that they're going to need to do and that they're going to have to do. And there's going to be increasing global pressure for China. And there's a huge opportunity here because we innovate like no one else in the world. No one can roll out new technologies and test them quicker, in scale than China can. And that's going to be the key ultimately to solving this, is developing and deploying technologies that can be used, on a cost-effective basis in the developing world. And so this is not easy, but I happen to think it's an area where they have made progress, and I think the two governments are going to continue to make progress. And I think there's a lot that can be done with NGOs and with experts from both nations and so on. So it's not easy, but there's few things that are really important in this world that are easy.
Okay, and the final question. I know a lot of people have been hoping to ask, but final question.
My name is Chris. I work in technology. My question is about financial risk and economic risk as it pertains to national surveillance. And because it seems like a lot of national surveillance leaks are geared towards to a degree about economic espionage. And so I guess the question is, if we're agreeing that this is the information age, is our information sufficiently secure from theft and illicit use?
Well, I think that is, I'm going to try very hard to be brief, because that's a huge question. And the simple answer is it isn't, okay? And to me, people confuse a whole lot of issues when you look at cyber. There's cyber, warfare, there's cyber terrorism, there are privacy issues, there's the espionage where governments collect information on other governments, and then there's, as you said, intellectual property, the economic issue, which is a very, very big issue. And so I start with, we should be, I am very concerned that this isn't an area where we're doing, first of all, more to protect ourselves. If there's thieves out there going to rob your house, you've got to lock the door. And I'd like there to see much stronger legislation rules in terms of if there is a cyber attack, reporting to the government, much stronger regulation in terms of what companies have to do to protect themselves. And then this is an issue in some ways like climate, in that it's not just a national issue, it's a global issue. And it's changing so quickly, we need new norms and rules and enforcement mechanisms. And so it's very, very important to find common ground with China. And there's some very tough issues and very divisive issues, outside of the economic arena. But in the economic area, this is the toughest issue we have with China. And so we really need to keep working to do that, but we just can't rely on that. We need to work with other members of the global community. And unfortunately, the Snowden affair and other issues have just made it much harder for us to claim the moral high ground here. But this is an area that needs to be fixed, and it really, I think, is very important to protecting our economic security.
Okay, I'm afraid we're out of time, but let's thank our speaker, Paulson.
Thank you.